Hi, this is Randy Finney with the right side of the chart, and this is a market wrap for Thursday, September 27, 2018. Wanted to just go over, this will be a quick one. We didn't have any major developments today, but a few things that I think are worth pointing out and highlighting, and we'll get to the daily and intraday charts in a second. I wanted to start out here with this 5-minute chart, or at least it goes back about 10 days. It shouldn't be just 5-minute periods. And I have three securities on here. We have QQQ, the Nasdaq 100 tracking index in white, the SPY S&P 500 tracking ETF in green, and then down here in that purple or magenta, whatever you call that color, you have IWM. And you can see the stark outperformance of QQQ compared to the S&P 500 and particularly the small caps. The small cap index, Russell 2000, has roughly 2,000 companies, roughly 500 in the S&P 500, and only 100 in the Nasdaq 100. And these two are much more diversified. They have various sectors. For example, in the Nasdaq 100, it's 60% technology stocks. So it's almost all tech, and you don't have any financials or other sectors. There are a lot of lacking in there that you have in S&P 500. So it's nothing we don't know. Same stocks, Apple up 2.12%, Amazon up almost 2%. Same stocks doing the heavy lifting, and that trend continues till it doesn't. But as I showed in prior videos, and most of you know that's a sign of deteriorating market internals when fewer and fewer companies do most of the heavy lifting. So it's crowded trades. So when that trade starts going the other way, it's not going to be pretty. But that's what it is for now. So let's just look at the other charts. Let's look at what happened today, and then we'll zoom out to the daily and intraday charts, 60-minute time frame. QQQ, this is the right here where the crosshairs are. I added a fib. This is just a 1-minute chart. So this shows you this gap right here, that break. That's yesterday's move. So there was the post FOMC high right here. That was faded hard into the close yesterday, but QQQ recovered all of that and then some. It was the only index to do it. And again, I use the term index loosely. It's more closely related to tech ETF or tech sector. But you have like I say, with an Amazon kicker in there, that's about it. Yes, there's 100 companies, so I'm being a bit facetious, but technically speaking, it is super concentrated, unlike most other indexes. So we did see tech was strong, one of the strongest, if not the strongest sectors today, and that took us above that post FOMC pop. There was a 2 o'clock announcement pop, and then the fade. And you can see I put up some fibs at the highs. We did give back up, so it wasn't a true trend day. We didn't close out or right off the highs. We retraced about. In fact, these are Fibonacci retracement levels 38.2. So we retraced a little more than a third of today's gains, but still an impressive, gain on QQQ today. And I'll get to the daily charts in 60 minutes a second, see if this really meant anything. Sometimes you can have a big up or down 1, even 2% day within a range. That may be a breakout. It may mean a lot technically, or it means absolutely nothing when it's just another, up day followed. We had a down day yesterday and up day today. So more of the same. So that's that. Again, one of the stronger indexes. Here's the S&P 500. Closed up about a quarter point, so much less. We go here. I might have some Fibonacci's. I'll put it up. There's yesterday's close. So from the lows to the highs today, let me zero that in. We retrace a little more, better than about 70%. We're beyond that 61.8 fib retracement right there. So about over 2/3 of the gains today were wiped out, or more accurately wiped out at the lows. There was a little, usually get some end of day squaring. So it was a little kickback rally, a mini bounce into the close, and we closed right on that 50% retracement. So look at it that way. We still closed positive, green day, but we gave up about half the gains off the highs today. And SPY failed to even come into the take out that post FOMC pop. Again, the 2 o'clock FOMC rate announcement, the pop, and then the fade. So that's that. This movie will have to be continued tomorrow. See if SPY can take that out. IWM, the small caps managed to close down or flat. We'll call it flat, so we don't have to pull out fibs, because there's yesterday's close, the yellow dotted line. You can see at the highs there, it was up okay, about 0.4%, and then all those gains and then some faded. So that's the common theme, and this is what I wanted to get to here. I'm seeing an unusual disparity in technicals. As I mentioned recently, IWM has, yesterday we had a clear and impulsive breakdown. Given we have to take that with a bit of skepticism because that happened on an FOMC day, and it was, that what I call the post FOMC noise. You usually get knee-jerk reactions either way, but so far that breakdown is legit because it hasn't been faded. So we can't call that a false breakdown yet. Take it on face value. I had again these two uptrend lines. I've zoomed in a little bit here. That 169.70 level I was watching, lots of reactions along there. It was support there. It was resistance, 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 broke out and support, and then an impulsive breakdown. So this keeps this on a sell signal. And one or two things are going to happen. You won't see this divergence and outperformance forever. There will be a mean reversion. When mean reversion means either QQQ coming down or going up less in IWM if it starts to reverse. Maybe IWM turns around and plays catch up. Maybe this was a false breakdown back test. But as of now, again, you can think what will happen, what may happen, but right now we have a breakdown, pretty clear, sell signal on IWM alone. Like I say, it's better. You want to see all the other indexes confirm as well, but that's that. Also worth noting, back in 2014, you don't have to have the markets always trending together. There was a period in early 2014, you can check it. IWM dropped, I'm going from memory, it was about 14% over a period of about over 7 months. It was just over 7 months. And the broad market, S&P 500 and QQQ, continued to rally, went up during that time period. So IWM had its own correction while the large caps rallied, and so that's certainly a possibility here. And again, it's not just the fact we broke both uptrend lines and broke that 169.70 level. It's a lot that goes into that, including, really the frequency between these corrections. You had a divergent and the divergence, of course. We had a rising wedge, negative divergence right there. It's clearly marked, just like we had divergence here with that correction, just like we had divergence here with that correction. And, we're due. That's it. We're overbought, divergent high. And so, and unless 169.70 gets taken back with conviction, maybe we back test for a little while, maybe not. That's a breakdown. I just want to point that out. And going up the spectrum of market cap, we have MDY. Let me switch over here. Here's a trend line. MDY, you can play around with these trend lines. You can certainly add the divergence lines here. Let me put it on this chart. MDY showing a couple trend lines. This white one right here, you can tighten this up. This would be my preferred draw right here because this captures the most bodies and or candlestick shadows. So this is my preferred trend line, but then I can add what I call a BOD, or benefit of the doubt trend line. Come off those lows, capture, there's a wick, and so we're right about on it. There's another candlestick wick right there, or a tail, I should say, the shadow. And really, so we had that impulsive move down yesterday, and even if I put that benefit of the doubt trend line, tighten it up there, we're under that one as well. This is a longer term trend line, this yellow one that comes into play. Let me take a look at that. You guys might want to replicate. That comes off the early 2016 lows. So we'll call that the final, that's the final straw, because I come in here and we have a couple reactions. So there it is. So there may be a little bit of room. And again, you have to give the benefit of the doubt here right now because the market has been resilient. We're seeing some what could be breakdowns or sell signals in some of these sectors and small cap indexes and mid caps. But, like I've been saying this for a while now, until tech breaks, this market's not going to break. It's not going to go too far down. But of course, like I said, we could have a mild, to moderate correction without tech breaking in the small caps or mid caps. So there it is. And let's go back and look at SPY. Let's go back to daily chart here. Moving up the ladder again. Here's SPY, and here's that trend line. Again, I'm focused on this white trend line off the late June lows right there. Several reactions, enough to validate it. Not the best defined trend line, but it's pretty good. You have a couple reactions there, another reaction, reactions, and then, as mentioned yesterday, an impulsive red candle. Closed it there. We also hit the 200-day moving average, exponential moving average. I can see it right under there. Oh, no, I'm sorry. That's not. That's a 20-day EMA under there. We hit that. But either way, we although it was a green day, it was still, we basically back tested. And there it is. So I don't want to take too much from this. We need to take out yesterday's candle. I think that's it. We need to go below there on SPY. That will help firm up the case that we're probably in correction mode in the markets, and then things might start picking up to the downside. But it's still all about QQQ as well and XLK. Here's that trend line I've been watching for a long time. We broke down that impulsive breakdown back there and have just been back testing up below it, and that's all we did again today. So all I can do is extend this trend line. I've seen back tests last for many months. Sometimes you get the back test, back test, back test, and those divergences stay intact, and eventually they're burned through, or you regain the trend line. But as of now, this is just a back test. But as I keep saying, we need to see this minor trend line right here go as well on QQQ, and then of course XLK. There it is. This thing is just, it's rare to see a sector like this hug this trend line. I talked about this before. During a healthy advance, you come down. Once you start forming a trend line, you have pretty explosive moves and rallies off those levels. You'll come test them for a few days maybe, but here we have 1, 2, 3. I won't count them all. You can do that. That's over a dozen candles easy, and almost every one, with a few exceptions, has kissed and found support on that trend line. So you can look at a glass half empty, glass half full. You can say, well, that's a support that the bears can't break. Bulls are defending, but it's also, XLK is hugging this line. It's not moving off it impulsively. The buyers are stepping in, but not impulsively at all. It's being defended for whatever powers that be cause that. Obviously, a lot of people watching this line. And there's also that sector rebalancing thing going on right now. We'll see if we get any false signals. But again, I think a break of that, XLK breaks, QQQ breaks, and that will probably bring us down here to that trend line there. So we're close. And I guess what I wanted to say today is, despite the strength in QQQ, that was not broad-based buying, broad-based strength. SPY, as I said, was only up about 0.25%. IWM was flat, traded down throughout the day, slightly negative. MDY, what did I say that was? I don't think I looked at it. Flat again. So the stock market, quote unquote, was mostly flat, just slightly up. Whereas QQQ was up, and I don't trade the Dow much or really track it. It's only 30 stocks, but you can certainly put a trend line there, and that's one to watch as well on DIA, or this is the Dow itself. Let's look at the DIA. There it is, same trend. So that's pretty much it. I don't think of much else that needs to be highlighted. This is that same trend line on SPY that I showed on the 60-minute chart recently. There was that impulsive candle yesterday, and I posted this before the market opened today on the site for members that we have this support here, and I had that line in advance, 289.39. We hit that almost to the button. The low was 289.41, so 2 cents. And as I often say, the initial tag of support from above typically produces a reaction. That's the reaction. In other words, these are the type of scenarios I draw out. We had a break, it was impulsive right there. We hit support, bounced, and we came back tested both that 291.62 resistance level as well as the trend line, and we reversed. So now what happens from here? Well, we'll know. If we get a convincing impulsive break of below 289.39, take out yesterday's lows, I think that will open up the door for a pretty swift move down here to at least 287.12. And if we can pop back above here with conviction, regain that trend line, then we might as well go to new highs. QQQ isn't too far from it, and there's just not a whole lot of resistance there. But as of now, that 291.62-ish level, sorry, let me get the right lines on here. Let me get a box tool. 291.62, give or take, is a pretty key level. It was resistance there. It was resistance here. We had a gap up. That's an impulsive breakout that took out that level. But so far, that breakout failed. It was very fleeting. This is a 60-minute chart. Only lasted a day or two. And we fell back below it. And we tested. And so far, we haven't gotten above there. So whether it gets taken out or not, I can tell you this is what I believe to be a significant level in the market. This is the broad market, the S&P 500. And you also have a trend line as well just above there. So Like I say, this is a breakdown and a back test so far, nothing more, nothing less. So despite the strength in QQQ, I think the onus right now is on the bulls to take this level back. Otherwise, well, of course, the bears have some work to do too, and they need to, of course, kill the tech stocks before they can really get anything of significance going. But that's what I'll be watching for. So tomorrow, let's keep it simple on SPY. Let's watch these two levels. Let's watch pretty much today's highs and yesterday's lows because I think that has a good shot at determining the next near-term direction in the market. We'll end it here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.